Hey friends, today I'm going to show you, actually this is supposed to be a part of my Diwali video, but I couldn't be able to make it on that particular day. So I was traveling at that point of time, so I couldn't be able to do that. So this video may be released a little bit later next week, 1 week after the Diwali time. So I just request you guys for apology. But whatever it is, time is something that never it's too late. Okay, whatever it is, you can start at the same time. So the stocks which I'm going to discuss on this video is going to be mainly for your long-term portfolio. It is not for your short-term. So this has to be considered as a long-term, and you can do in SIP mode also. And this video again, it's an education purpose. You first understand the logic where I'm coming from, what I'm trying to say, in what basis I have selected these stocks, and understand the logic behind that. And you also think from your perspective whether it suits your goal and vision, and then you can plan it. And another thing is, after this or during this video, I'll try to explain how to set your portfolio and how to set the weightage and how to rebalance your stocks. That also I will cover, so that in the future, if anything happens, you can rebalance your portfolio. So let's get into this video. And this is Sundar, and you are watching Mindful Finance. Okay, in our list, first stock which I'm going to talk about is TCS. You may think like, what is this guy is going to boring me? So, but watch this video full completely, and I have diversified this portfolio. You will get complete clarity on why I am selecting this stock and what is the logic behind that. So, Tata Consultancy is the topmost. It's a blue chip stock. So, when we go for a long term, you need to make sure that it has to pass the generation. You should be able to give this to your son or daughter as a gift going forward. So that is the mindset over here. So in that perspective, I have selected high growth stock, defensive stock, highly volatile stocks, and like short term stocks. So it's a mix of things, and also industry also, it's a mix of industry. You will understand the logics behind it. You see that everybody knows the Tata Consultancy. I don't want to keep stressing on this one, but main thing is currently Tata Consultancy service is trading a little bit lower. If you see, come and see the PE value. Industry PE is 32. TCS is trading around 29. PE wise, it is low, and the revenue wise, it is growing. Sales is growing. If you see you can see sales is keep on growing, consistently growing, and operating profit margin is consistent. The only problem with this kind of a company, this is a service-based company. We service to US or Europe or whatever it is, right? So there, the problem is your volume may increase, but you don't have luxury to increase your pricing power. So for example, 1 hour a employee, you might be quoting for a customer, say like $15. So I still know that like in past 10 years, this $15 is not increased nothing much has happened. Okay, $15 may have increased to say $16 or $18, but not a big change in the pricing. So that's the main problem in this kind of companies. But that is why the volume increases, but the pricing power is constant. So operating profit margin always, this kind of company will be a consistent. If you see 20, this is the OPM. If you see, in average it is like 25, 26, 27, 28. So this is the operating margin. So they are maintaining that particular thing. And check the cash flow for this kind of a company. You see the cash flow, net cash flow. Last year it was minus, but now it is in plus. Cash flow has to be in a positive side. And if you see the shareholder patterns, promoters still holding the same. So that is a very good, like almost 70% of the promoter. It is not what to say, like it's a very, even though promoter holding is very high, but it is run by PNs. So this is the first stock I want to recommend. And if I show you some technical part of it, let me show technical part of it. If you see the technical part of consultants, you can see how much it went. Still there is a potential that this stock may fall till here. Okay, till here it may fall, which is 3,670. So there's a chance, potential chance this can fall till here, and then again it will have a bull run. Okay, and it is in a channel pattern. You can clearly see it is in a channel pattern, and this is in the rising pattern. This consolidation is happening for a very long time in this area. So this is some something like a very big resistance for this one. So this again it has broken. So this is going to break again. But my assumption is it may come down till here and it will recover, and then still it will grow. So I don't want to give a target or anything. So because this stock is going to be your lifetime investment, so you have to slowly accumulate. So in that case, nothing to worry about where this is going to go. But in a rough estimate, if I give you, may go to 5,130. Okay, it has a potential to go there, which is from the current scenario, it is 28%. So in the short term, it can go to this level. Next company which we are going to check is JB Chemical and Pharmaceutical. So this is a 30,000 market cap company, and currently it is trading at 1,900, and stock P is 51.9. So if you compare to the peers, it is trading at a high P, that is for sure. But compared to other companies, this company is having a diversification, and the offerings are very good. Okay, and it has a high potential to grow in future. So as I mentioned, so the P is currently high. It may reduce further. Let's see how much P it is. It is consolidating over here. The P is consolidating at T, but this this company own P is 20. So it is almost like 30 P. It is higher than that. But this is considered as a growth stock. So normally for growth, people may tend to give higher valuation, but you can be a little bit cautious and don't dump all this money in one stock. So you have to clearly diversify your portfolio. If you see, the company has reduced its debt. Okay, it's almost getting into the debt-free mode, and sales is consistently increasing. Operating profit little bit decreased, but this year it is increasing. Like quarterly, it is increasing. Overall, if you see, operating profit is increasing. Okay, net profit also increasing. You can clearly see how the net profit is increasing. And if you see the CAGR growth, like in the last 10 years, it is 20%. Last 3 years, 10%. Last 3 years, it has given a low return. Expecting this may give a good return in the coming years. Return on equity, last 3 years, 19%. Last year, it was 20%. So average, it is giving 20% return on equity. So that is a good sign. So if I show the technical part of this company, JB Chemicals. Okay, so if you see the JB Chemicals and Pharmacy, you see this is channel. Okay, and it's a rising channel. Still, it is in a momentum only. RSI is getting into almost like trading around 60. Okay, in the weekly. So it is slowly picking the momentum. It has a good potential because this is the all-time high. You see, it is trying to break the all-time high. So in the short run, it has a potential to give you around 28%. But long term, again, this is a good stock to consolidate and do it in a SIP mode. Next stock I'm going to talk about is Manappuram Finance. So Manappuram is trading at very good price, very attractive price. Its book value is just 1.15, and it is a gold-based one, and it has recently fall a lot, but it is again going up. See the price, it went down like anything. See the price went again, it is recovering. But overall, if you see the PE also very low, so it is trading at a very cheaper price. Okay, it's like a hedging for your portfolio basically. If I show the technical pattern of Manappuram Finance, you see, oh man, how big fall it is. And it is again, if I tell you, it is again expanded flat kind of mode. So again, this is A, B, C, D and E. So this is an expanded flat correction it is happening. So this is going to be a good bullish stock. In the long term, it is going to give a very good profit. So next stock which we are going to discuss is HDFC AMC. Okay, HDFC Asset Management Company. This is a very good company, and as you all know, that mutual fund is a growing right now, and it is evolving. It is going to get more and more. But again, it depends upon the market. If the market goes down, people will get panic and start to sell, and their business may go down. But in a longer run, this business is going to survive, and this is the next because everybody is looking into get money from return from stock market. So nobody is going and investing in any other place like FD or anything. So everybody is coming to mutual fund only, and in that case, so HDFC AMC has a very good potential to grow further here. If you see the PE, it is 41.5, book value is 318, and price to book value is 13.5. But this is not a banking sector which is run based on the loan. So it is a purely you have to check the PE. The PE is 37.5. See the its own PE which is 40. So it is closer to its PE. So it's a fairly valued company. And if you see the sales, it is consistently increasing. Look at the operating profit margin, keep on increasing, and yeah, it's a very good company. Okay, and cash flow also is keep on increasing. And if you see the shareholders pattern, FIAs, as in, even though everybody is selling in the FIA side, so this is the FIAs has increase the position. So that's a good sign. So you see the technical part of HDFC AMC, you see it is consistently like making an ascending triangle. Okay, it is making a ascending triangle kind of a pattern. And if you see the RSI, it has made a it is a higher low, but here it is lower low. So it is again a reversal pattern. Currently it is trading at how much? Almost 12% lesser than the all-time high. It may correct further. See how much it can correct. See, there's a potential chance it may correct till this one. Okay, 4,100 can correct till that, but this is in a support zone. Okay, you can see this is support, in very good support, because this green candle is the big volume candle. So if this candle breaks, then it will go down. So, but currently this is what supporting this particular momentum. So we can expect this will be this big support and it will recover back. So next one which we are going to look at is L&T Finance. For the Diwali stock also I have explained this one. So L&T Finance is a good stock and currently trading at just 146 rupees, and it is kind of a mid cap side. And I also explained in detail about the business and everything in my previous video, so you can go on. So overall L&T Finance is in a very good position. So this is my next stock. So my next stock is Hindustan Aeronautics Limited, HAL. So everybody knows this company. This is a defense side one, and it's a government enabled company, and this is having a very good growth. The only problem with this company is it's purely budget driven company. If Indian government reduces the budget for weapons and other things, so their growth may get affected. But in the long run, this is going to be a booming company. So technical wise, if you see, I don't want to get into the details of profit. Is already growing. It's growing a multiple way. The OPM is 32%, growing like anything. Okay, and let's see the PE. What is the PE for this? PE is 34.6, which is lesser than the industry PE. So HAL is trading at a very good price. Let's see the technical. If you see the HAL, okay, this was a big candle and then it went a sideways. So basically, you draw like this. It has broken this trend line. But if I draw from here, we don't know. So this could be a support. Let's see. But it has fallen a lot. We see how much. See, it is at a good support here. So it has traced 78%. So it is at good support. So this is a reversal place for this one. It's going to be. If I see the RSI, let's see in the daily below 60. So it might be a little bit slow. So we need to wait till it breaks out this trend line. But don't worry about that, because this is going to be a long term, and we need to buy at the cheaper price, not at the breakout level. That doesn't matter for us. We don't care about the breakout zone or anything. So we are going to consistently invest in this kind of company. So it is in a very good position. If we draw this way, so it has taken a support double bottom and then recovering. So this is a good volume candle here. So it's in a good support. So next stock I'm going to discuss is Indian Energy Exchange. Earlier it used to be a monopoly, but now it's not no more a monopoly. Like a couple of other energy exchanges started, but this is kind of have their own benefit. Like they started initially and they have a good market position, and it has more potential to grow in the future, because energy exchange is like our NSE BSE kind of thing, like stock exchange, right? So every electric power company will be traded from their exchange. So power is going to be always going to be there. Whatever happens, electric power is needed, right? So in that case, without this, we cannot do anything. So that way, this is going to be a continuous defense stock. Okay, this is a defense stock, and they give a good dividend also for you. So if I look at the technical part of IEX, go to monthly view. So this was the time it was called as a monopoly, and people invested a lot in this one, and then it fell. Now if you see, this is accumulation phase. This is called accumulation phase. Whenever this accumulation happens, always there will be a good momentum. So this is normally an accumulation phase. So it will form like this, okay, and then it will form a double top, and then it may form another cup. So it will look like a cup and handle, and then this particular depth, right? This will be your next level from here. So which is 61% from this breakout. But from now onwards, it may go till 188%. Okay, it has a good potential. See, downside is very limited. Okay, if I see downside, this is my stop loss. Okay, 33%. This is a downside. So it may come down till here, which is another 15%. It can fall. Okay, just watch out. In a daily view, it has already, I think, bottomed out. So this is a low. This is a higher low. Still, it is not it. It is a 78% level. So we can expect a reversal from here. Okay, that is going to surely. I'm feeling like it can reverse. If it falls further, okay, maximum it can come till here. So till here it can come, which is 161, and then it can go. But again, we are a long-term investor. It doesn't matter. So another company which I'm going to discuss is Gateway Distriparks, which I explained you clearly complete fundamentals in my previous Diwali stock. And this is a logistic company, and it has a very good potential in the future. And it is trading at just 19 PE, and it's a micro cap. It's like a small cap. It has a very good potential to grow. This is also another. So next company is Varun Beverage. So everybody aware of Varun Beverage. The main what they do is they have very good supply chain mechanism, and they are across global also. The main product they have a contract with Pepsi. So whatever the PepsiCo has, all those things they are dealing, and they are supplying those in India and other countries. All the snacks, everything. So they can like sodas, carbonated soft drinks, non-carbonated soft drinks. All those things are they're supplying, and it is a growth sector, and this is going to be always there. Pepsi, about all the snacks and everything, right? So this going to be always there. PE wise, it is trading a little bit higher side. See, little bit higher, but not big, not too much. Okay, it's okay. See, overall 80, so average is 60. So 20 PE it is trading above, and another thing is book value is trading 22.6. So a little bit in the higher side, but yeah, company wise it's a growth sector. The industry PE is 35, but it is trading at 76. So this is trading at currently at a higher price, but we need to be very cautious. Let's check the technical part of this. If you look at the Varun Beverage technical, it's like gone vertically high. So it has, I think this may correct. Okay, this may correct a lot, but let's see. So it has retraced till 38%. So that means still it is showing a momentum. So yeah, just don't worry about that. This is a growth sector, growth company. This will keep growing. So this is, see, if it falls, it may fall to this zone, which is around 517 or any other this area. But it's a very good stock, very good company. Focus on this. So next company I'm going to check is IndiaMART, and IndiaMART is a B2B company. It's an established company. You know about this. I don't want to get into the detail, but overall the company is fairly priced right now. P is just 34, and it's currently trading at 2,500. And it's see the cash flow for this company. It is maintaining a very good cash. Okay, so I need to rush because I want to cover this video in a shorter time. But overall, if you see, this is IndiaMART is in a very good position. It is consolidating for consolidating a while. This was the trend line it broke from. This is a trend line. It broke the trend line, and this is making a support over here. So this is the support zone it is trying to build, because multiple time tested this zone, and it is probably this is going to be a long-term support, and it has to break this trend line. If we draw, so this is taking a support at this trend line also. So if I draw this one, so it has to break this one. Draw this like this now. So there might be a little bit. It can go, but it may have support already. So it can settle between this particular area, and then it may grow. The short term only can go around 100%. So IndiaMART is in a very good position. So next company is called Zenotech Laboratories. It is supported by Sun Pharma. So at any point of time, maybe Sun Pharma can acquire this company also. But overall, Zenotech is manufacturing products for Sun Pharma, and it is fully dependent on Sun Pharma. Okay. Currently, the stock PE is a little bit higher side, but it's a micro cap, so it might, the PE of the micro cap always be a little bit higher side, but it has a very good potential to grow. If you see the growth of this company, sales is consistent. Okay, it's a little bit volatile, but it is consistent, and you can see operating profit margins keep on reducing. So that is the challenge for this company. But overall, it has a good potential to grow. Recently, see the 3 years, 5 years, you see it has shown a good growth. And if you see the return on equity, last year it was 19%, 5 years it is 14%. So it's slowly improvising the thing. So I check the cash flows. Recently, the cash flow is in negative side. So that is a very negative point. Maybe they are doing some kind of investment. Overall, growth is good. Company growth is good, and shareholder pattern, like promoter holding, is consistently remaining same, and DAA just they are also holding the same position. It's not a big we cannot see, so it's not a big company's holding, but government also having some kind of holding in this. So that way, our PF and everything would have been invested over. So this company also is a good company. I don't want to get into the technical part of this one for the time being, but it is making you can see a cup handle. So multiple long year it is growing, and the price is trading at around 80 rupees. It's less than 100 rupees share. So this is a good stock to buy. So next company is Tech Mahindra. Tech Mahindra is also a good company, and it's currently fairly priced. The industry P is 32. It is trading at 48. So all the IT sectors may correct a bit now. We discussed about TCS also, right? Similarly, Tech Mahindra also chance to reduce a bit. But overall, Tech Mahindra is a good company across their services in Europe region. If you see the sales, these are similar to TCS. So all the service company will be like they will have a good volume. they cannot have a pricing power, so but still they'll try to maintain that OPM. Okay, so that way Tech Mahindra is also a good company to add in the portfolio. So next company is Tata Power. Tata Power PE is little bit higher side. If you see it, Tata Power's own PE, it is 20, but it is trading around 35 or 40. So PE wise, it is little bit higher side, but this is going to be the top company in the future. This needs to be in our portfolio, whatever the case. Its sales is increasing, operating profit margin is 15, 18, now 21, so it is increasing. So it's a growth sector, so we need to have compulsory. We need to have this in our portfolio. The next company is Garden Reach Shipbuilders. It is mainly they build warships and other things, and it's a government supported company. And again, it depends upon the orders they get based on the government, but it is also a growth sector. Going forward, already they have made a lot of deals in the recent past, and the price wise, if you see, it has corrected a lot right now. It went to around like 2,700, and right now it is trading around 1,600. So this is a good time to add this in our portfolio. So next company, it's a must to have is CDSL. So everybody would have known this, and you would have seen others also talking about this company. The reason behind this company is CDSL and KFintech. These are the two competitors in our India. All our investments are tracked in this company by this company. So our mutual funds, like what we discussed in HDFC AMC, similarly CDSL also is important, because whatever HDFC AMC is doing, these guys has to back those things. So without this, HDFC AMC also cannot run. So so this is also a growing sector, and this is a must. So currently, if you see, it's in 60.6, which is almost close to the industry PE. Okay, so PE wise, it's fairly valued. Price wise, if you see, it is keep on in a higher side, it's going in a rising side. Okay, so if it corrects more, then you can consider for more adding, but we'll have a SIP concept, and this also needs to be in our portfolio. So now I'm going to tell you how to make your portfolio and how to track that one and how to rebalance it. So the stocks which I explained to you, all these are listed over here. Okay, I'll just explain. I'll share this Excel also with you guys. See, I'm having a rough estimation over here. So I'm going to plan. This is my weightage, and this is a type of investment type it is. Okay, this is the investment type. This is a blue chip. This is a defensive sector. This is a NBFC. This is a AMC. This is a financial stability, government-backed defense, growth in power trading, growth is a logistic, high growth, digital marketplace, pharma, IT. So I have created a diversified portfolio for you based on sector, and I also have given allocation based on that one. Okay, and this is the current price of the stocks, and assuming I bought this at the same price. Okay, so based on the weightage, you need to invest 45,000 for you for now at the first time. You can have partial also, so slowly you can build it. Whenever you get a time, you can add the stocks, but this is the weightage, and these are the number of stocks you need to have. And I have given a formula for you. For example, the value of this invested value of, say, this first one was TCS, so it increased to value. The stock has grown a high, and the price has increased from 3,900. It has become 5,000. So that means what will happen is your weight will change to 6%. Currently, at current your weight is 9%. Okay, the reason is the other stock has grown again as 7%, 7,000. Sorry, from 3,900 to it has become 7,000. So this also increased. The price got increased. Similarly, one stock became 10,000. One stock became 20,000. So here, this is the new weight formula. Okay, so you have to check this one. So how do we check? So new weight minus my current weight. So there's a decrease, or sorry, increase in. So that's a decrease. So 2% decreased here, and here 0.03%, here minus 2%, minus 4. So you can find a new weight for your portfolio. Okay, so in that case, what you need to do is you have to again come back to your normal portfolio. What you have to do is you have to book a profit, or you have to increase or adjust your quantity. So for example, here minus 2% means you have to again buy to make this as a similar weightage. So likewise, you have to rebalance your portfolio. Sometimes booking a profit also is good, and change your allocation. So this is how you have to allocate your portfolio, and I'll share this Excel also with you so that you can use it portfolio management. So hope you like this video, and so this is a diversified portfolio, and this is for long term, and you have to keep rebalancing your portfolio, and you have to track this portfolio. It's not that like invest now and leave it kind of a thing. You have to consistently, you have to in a SIP mode or something, you have to keep invest, then only you can reap the benefit. And again, whatever I have I'm telling you over here is for just for your education purpose. Don't go and start investing on this in a bulk or anything. You seek out help from your financial advisor or SEBI registered advisor, as I'm not a SEBI registered advisor, so I cannot guide you to invest by yourself. So that way, so I hope you like this video. If you like, please subscribe and share your comments and share this video to your friends and colleagues. Thank you.